So you're thinking about using finance for investing. Please take the time to watch this because I'm going to give you the do's and don'ts. I'm Kelly Bowen from Lifestyle Finance Australia, and we're a finance brokerage. So we see this stuff going on every day, and I want to share with you some of the industry insider hacks about how you can get the best rate, how you can have the how you can protect your credit file, what to look for, and some of the things that people are just unconsciously doing because they don't know better that's really hurting them in the finance space. So the first thing that I want to chat about is positive reporting. Now, this is a new thing that was brought in, I think, July 2019, July last year. And what this is that for the first time ever, banks are talking to each other about your personal banking history. So what does that mean in English? Your credit card repayment history is now common knowledge to other banks. Your personal loan repayment history is now common knowledge to all banks that have opted into this positive reporting. Your car loan repayment history is common knowledge. Your mortgage repayment history is all common knowledge within this positive reporting body where the banks have opted in. And in the past, they never used to be able to see this information. You could have two credit cards with CBA, and you might have a loan with Westpac, but but there was no way for them to know that you had that unless they either looked on your bank statement or you declared it in a finance application. So now there's no more hiding. What is really important that I really want to stress about this is with positive reporting, if you don't pay your loan on time, if you don't pay your credit cards on time, you will get eaten up by this. And when you go to apply for whether it be a mortgage, a car loan, a personal loan, whatever it is, if you don't have history that you've been paying back your existing finance commitments on time, they'll knock you back straight away. Or if they don't knock you back, they'll just charge you a super high interest rate. So please, if you don't already have your stuff on direct debits, if you're not already paying your stuff on time, get that shit sorted, because in the long term finance game, that could really cost you. And I just want to share that with you because it hasn't been made common knowledge, but this is one of the new changes that's been going on within the finance industry. Second thing I want to share with you, credit card debt. So with credit card debt, depending upon where you're at with this, if you pay your cards off on time each month, no problem. Or if you pay them off within a couple of months, really not a problem, the interest is minimal. But if you've had credit cards sitting there that you've really been struggling to manage and you haven't really been getting on top of them, consolidate them into a personal loan and then pay them off at a rate that you will be able to pay them off as. The difference between a credit card rate and a personal loan rate, credit cards you're usually looking at 19% plus. Personal loans, they're somewhere around between the 10 to 13%. Depending upon how good your profile is, you may even get sub 10%. So definitely the best way to get those credit cards paid off and knocked out and get that money back in your pocket. Next thing that we've got, if you're looking at investing in education, business products and services, you can't go past personal loan finance because, again, you get money cheaply, you've got a lot of flexibility with how you pay it off, and you're able to get what you need to get you to where you want to be faster than you ever could, as if you were saving dollar for dollar, doing it the long, hard way, push it uphill someday, one day. That never really happened. So don't be afraid to use personal loan finance to get ahead, to do that personal development course, to do that business course, to do that marketing course, to invest in yourself. That's what they're there for. What personal loan finance is not for is for consumer spending, living well beyond your means. That kind of debt will eat you up. But if you're using it to invest in your future, big thumbs up from me. Next thing, and being a finance broker, I'm going to say this: use a good broker. Don't be a tight ass around this one. Don't think you can do it better. The amount of times I've had people come through the brokerage with got them some quotes, and they're like, oh, I can do better elsewhere, I can get 8.99 with ING or something like that, and they literally come back to me within the space of 4 days going, oh, ING knocked me back, and which totally changes the rates that we were now able to get them because it's messed with their credit file. So guys, as much as the marketing out there looks really sexy to take that cheap interest rate, don't be a sucker and fall for it. Get a good broker on your team, like us, where we can do the bidding for you. We know how to protect your credit file. We know how to position your profile so you get the cheapest money that suits your needs. Next, if you are self-employed, please, 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 for the love of you, declare some income on your tax returns, because if you want to get finance and you're putting through tax returns where you're only declaring like $20,000, $30,000 as your total taxable income, finance companies are going to laugh at you because there's just not enough money there to service a loan, and they use your end of year taxable income as your play money for things like finance. They don't look at the gross revenue of your business. They couldn't care less about it. They literally care about what's on that tax return. So if you know that you've got some things that you want to finance in the future within the next 12 months and you're self-employed, make sure you declare something on your tax return that year so that you do have access to lending. And then the year after, you can go back to declaring your 20, 30,000, writing everything off. But yeah, just be smart about it. Then this one, I kind of mentioned this a little bit before about get a good finance broker. Don't try and do your own finance. Get a professional. Use brokers. We're here to help you. We specialize in this stuff. We deal with it every day. Now, this is another one I see sitting on people's credit files, and they do this out of principle as opposed to just tidying it up. So don't let defaults sit on your credit file. Now, what I mean by a default is could be a utility provider, it could be a telco, it could be a old loan that you had years ago that you just didn't pay off for whatever reason. Doesn't really matter. But these are things where you've had credit given to you and you haven't paid it back. And what happens if they can't get hold of you, it then defaults and sits on your credit file. So when you do go to apply for finance companies go, well, look, you've had credit in the past, you didn't pay it off, we don't want to take a risk on you. So if you don't know whether you do or don't have defaults, if you don't have people chasing you, typically speaking, you don't have defaults. But if you do, like if you know that you moved house and there was an old bill that didn't get paid and you're like, oh, I won't worry about it, chances are that's sitting on your credit file now as a default. So if you've got any of that stuff there, get it tidied up, get it on payment plans, get it paid out, or dispute it and get it removed. Whatever it is, please don't let them sit there, because this stuff, when you are wanting to use finance and other people's money, will horribly ruin your chances, and it puts you into a high risk category where you have to pay rates of up to like 30%, which is ridiculous. Now, these next two are like big no-nos in terms of what lenders are looking for when they're looking at giving you money. So avoid payday lenders and avoid using Zip Pay and Afterpay. So payday lenders, these are the guys that pretty much offer you anything less than $4,000 as fast, easy money. Get it quick, pay it off, within the next couple of weeks. They're seeing, when you use payday lenders, the problem with them is how normal banks look at it is that you're desperate for money. Why are you wanting money between paydays? They look at it like you're not managing your day-to-day living expenses, which is why you're running short. Now, we know in not all examples that's accurate, but that's just how banks tend to blanket look at it. So if you are using, if you have ever used, like, get a couple of $100 to pay for your rego, or to, you've got a $1,000 vet bill or something comes up and you see any one of those ads, fast, quick cash for anything less than $4,000, just avoid it. You're much better off going to your bank and getting a personal loan for $4,000 plus. It's not going to hurt your credit file. At the very least, you're going to show you've got some kind of responsible relationship with credit, which banks always like to see going down that path. Curious about a payday lender? Just Google it. You'll get a whole list of them and you'll see the ones to avoid. Now, Zip Pay and Afterpay, these are relatively new. They've probably popped up in the last 24 months, and they're a merchant facility you often see with online purchases, which will be buy the dress, buy the shoes, buy the fancy whatever you can't afford right now and pay it off in the next 3 payments. What's not advertised about ZipPay and Afterpay is that these are small finance blends, even though it might be paid off within 3 weeks. And every time you use them, it affects your credit score. It goes down and down. The lower your credit score, the higher risk you are. The higher your credit score, the better risk you are. So avoid little things like ZipPay and Afterpay. Essentially, they're just there to encourage you to spend beyond your means. So avoid them. It's not really helping you. And then finally, my final don't is make multiple applications for finance in a short period of time. You really don't want to be having more than 1 finance inquiry on your credit file per year. And the other big thing is don't go shopping for interest rates on your own, because often you're making finance inquiries and you don't realize you're doing that. And every finance inquiry, I think, costs you like 60 points on your credit score. Your credit score is only out of 1200, and anything below 500, you're starting to get into the high risk category. So, you know, protect your credit scores, do your research, do it once and do it right. So these are my do's and don'ts with finance. Now I hope you're feeling a little bit more confident when you're navigating the finance space. Like I said, if you're looking for a broker, we're totally happy to help with any of your finance needs. That's what we're here for. But I hope this gives you a little bit more confidence, and I've hoped you found value, and I'll see you on the next video.